Sort of weave some of the strands of your answers together and ask you, as you start to reverse policy, what your goal is. Are you going to be raising interest rates until you get inflation to 2%? Do you want to go below 2% so that on average you get a 2% inflation rate? And because you said we have to protect the employment part of your mandate, is there some sort of circuit breaker that would stop you from raising interest rates on the employment side?
So no, there's nothing in our framework about having inflation run below 2%. So that we would do that, try to achieve that outcome. So the answer to that is no. What we're trying to do is keep inflation expectations well anchored at 2%. That's always the ultimate goal. And we do that in the service of having inflation. We get to that goal by having inflation average 2% over time. And if inflation doesn't average 2% over time, then it's not clear why inflation expectations would be anchored at 2%. So that's the way we think about that. What was the last part of your question?
I was asking if you're protecting the employment side of the mandate, whether there's some sort of circuit breaker there.
Nothing like that. I mean, I would say you have a tremendously strong labor market.
Another 260,000 people applied for first-time unemployment claims last week. It's virtually the same every single week, and net every month we are losing jobs, but you're not allowed to know that.
And you have growth this year forecast to be well above potential. I mean, people are forecasting growth. You think potential growth is around 2. Most forecasts are significantly above that for 2022, and that's even with policy becoming substantially less accommodative. So the labor market's going to be strong for some time.
People, it's all a lie. All of it, okay? GDP is cratering. Today, for example, alone, I was writing some of this stuff down. Durable goods orders fall off a cliff. Pending home sales nosedive. Supply chain disruptions are everywhere, not getting any better. Inflation is surging. Factory activity, again, is cratering. It's over. The economy is dead. And it's not just here in the United States. It's a global phenomenon. But again, the propaganda ministry is going to try desperately to convince you that we're doing phenomenal, we're great, and we are tremendous. It's not true.
Ideally, what we're trying to achieve is inflation getting back down to 2%. And we're trying to do that in a process that will also leave the labor market in a very strong position. And no one really knows what that will take. Again, I would say that it isn't just monetary policy that's helping inflation get down. It'll be supply side improvements, and it'll be less fiscal impulse, in all likelihood. So, but monetary policy will do our job. It is our job to get inflation down to 2%. And a situation where the two goals can be in tension is a difficult one. But I don't really think they are here, though, because I think a really significant threat to further strengthening in the labor market in the form of higher participation over time is high inflation. And also high inflation is taking away the benefits of some of these large wage increases that we're seeing now. So we do hope to achieve, and our plan is to achieve both of those goals.
I really believed that the Fed would do something because inflation is so far out of control. Did you watch the Federal Reserve conference with Yellowstone Powell? How many times did that man mention price stability?
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. We believe that the best thing we can do to support continued labor market gains is to promote a long expansion, and that will require price stability. We're committed to our price stability goal. We will use our tools both to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched. As you know, the ultimate focus that we have is on the real economy, maximum employment and price stability, and financial conditions matter to the extent that they have implications for achieving the dual mandate.
Over and over and over again, we have no price stability whatsoever. We have surging inflation, it's out of control, and a middle class that is paying the price here on a grand scale. So my epiphany is this. The Federal Reserve is now in its, again, really in their endgame, or their last phase of destroying the economy and the middle class in an attempt to fulfill their endgame. Think about it. The Fed, obviously, by not acting on a market that was clearly pricing in a rate hike, the Federal Reserve is more determined than ever to continue to inflate, keep pressure on the middle class, fulfill their endgame to become the lender and buyer of last resort, to own it all. That's really what this is all about. Maybe I was a little too optimistic. I realize clearly what the Federal Reserve mission is. Their mission, well, is to own it all, is to keep the economy suppressed, to keep people under control, to keep people fearful, and again, to foster their two-tier society, feudal system, feudal overlords. The Fed, they're really determined to hurt people on an epic scale. They already are. They're destroying the economy. They're destroying people. And they're not going to stop, as I told you, until every single straggler left in the middle class is gone. Gone, in the literal sense. Going back to Powell here. So he explained, he said over and over, price stability, price stability, price stability. Tell me where we have price stability today. The Federal Reserve's mandate, one of their mandates, is to maintain price stability. We have nothing, not even a resemblance, the slightest bit of price stability. We have surging inflation. And I'm still waiting for one of our members of Congress that care about us so much to have the Federal Reserve explain how they've gotten it so wrong with regard to their price mandate or price stability mandate. Won't happen because they're not the government and you have no representation at all. So anyway, he says everything is going according to the Federal Reserve's public mission. Now, what does he mean by that? I think their mission is to destroy an entire class of people. It's in your face and it's happening. You see, but he can't actually say that.
Boston to Goldsboro, North Carolina, to Midland, Texas, to Seattle, there are fewer adults living in middle-class households across the country than there were in 2000. The analysis by the Pew Research Center found that in 160 metro areas, there was an increase of lower-income households, and 172 metro areas saw a rise in upper-income households.
What happens in this economy is that the middle class drives it. The middle class are the consumers, right? The upper end are the investors. The lower end are getting by. The middle class are the consumers in this economy. And so what this study really says is this is bad news for the future of economic growth in this country. And that's why it matters.
As we pointed out, there were some places where the middle class got smaller because people got richer, and there were other places where the middle class got smaller because people got poorer. A couple of those different locations, examples?
Yeah, so there are some really good ones in this study. So if you look at Goldsboro, North Carolina, right? It used to be a railroad junction. It used to have a big Air Force base by it. It is an old economy town. It is a town that is seeing the economy go away from it. And right in that town, you see more people sliding from the middle class to the lower class. They're having a tougher time getting by. If you look at a place like Midland, Texas, which the Pew Research folks pulled out, Midland, Texas is an energy economy. The energy economy in the last 15 years in this country has been doing really well. And so people there are moving from the middle class to the upper class. It's not a zero-sum game, but this economy is changing, and that's what's driving this entire study and the fate of the middle class.
Now, we've heard of the middle class declining in rural areas. Is there a difference when we see that this is such a big deal in metro cities as well?
Well, the root of this study is income inequality, right? And we've known about it for a long time in the rural areas. It is now coming to these things called metropolitan statistical areas, these big centers of population, some big, some less big, where the bulk of the population in this country lives. Wages have been stagnant in this economy for decades now, right? Which means incomes and household wealth are stagnant, which means there is more income inequality. And when you have income inequality, you have more going to the low end, you have more going to the high end, and those drivers of prosperity in America are getting, as you said in the beginning, hollowed out.
So how does this square with the people that you've been talking to in the series you're working on as you report this?
So here's the thing. I'm going out into the field next week to talk to a couple that we first met in a coffee shop about 6 months ago here in downtown Los Angeles. They're both teachers. One of them has a master's degree. They are literally the epitome of the American middle class, right? You'd think if they can't make it on a teacher's salary, then something's up. Here's the deal. We were sitting there chatting over a cup of coffee and a piece of pie, and the husband said to me, "We've given up. We're done. We know we're never going to own a house. We're never going to grow beyond the middle class. We're buried in student debt. We don't really know if we're going to be able to afford to send our child to school," and they have given up. And that tells you what's at root in this study.
So we're hearing now that Fed Vice Chair Clarida is going to be resigning because of his questionable trades, insider trading at the Fed. We have seen more than a few Fed officials resign due to being caught insider trading.
Anytime the Federal Reserve's code of ethics is in the news, it's probably not a good thing. And all this swirling around the disclosure that we got from the Dallas and the Boston Fed presidents just a few weeks ago, detailing several multi-million-dollar transactions. You'll recall that Robert Kaplan, the head of the Dallas Fed, made investments over the course of 2020 in stocks like Delta, Chevron, Verizon, which is Yahoo's former parent company, Apple, including also a floating bond rate ETF. And
Pal, I have a quick administrative question. Robert Kaplan's disclosure of his securities transactions, in a couple months, Chair Powell, or maybe sooner, you and I will file our tax returns and we'll list transactions and all kinds of things. And next to those transactions, we'll put dates. And Bloomberg asked for the dates of Mr. Kaplan's transactions. The Dallas Fed is not giving us the dates. And I don't see why this is a matter for the Inspector General or anybody else. I mean, why can't he give us the dates? Will you help us get the dates of those transactions? Thanks.
I know you've been all over this issue with my colleagues, Craig, on the issue of information. We don't have that information at the board, and I asked the Inspector General to do an investigation, and that is out of my hands. I play no role in it. I seek to play no role in it, and I can't help you here today on this issue, and I'm sorry I can't.
All of that followed from another report from Bloomberg that said Boston Fed President Eric Rosengren made several large transactions in real estate investment trusts. Now we're getting a follow-up from the Federal Reserve Board. Keep in mind the Federal Reserve Board sits on top in terms of the Federal Reserve system structure over the 12 reserve banks across the country. And Fed Chairman Jerome Powell now saying that he wants to review the ethics rules across the system. This is a statement from a Fed spokesperson that I want to read to you, which I believe we have a full screen of. Quote, "Because the trust of the American people is essential for the Federal Reserve to effectively carry out our important mission," Chair Powell late last week directed board staff to take a fresh and comprehensive look at the ethics rules around permissible financial holdings and activities by senior Fed officials. And the fallout is continuing. There was actually the Revolving Door Project, which is a DC-based advocacy group, this morning calling for Powell to put both of the bank presidents on leave. It's unclear about whether or not he has the authority to do that, but it seems like headed into the Federal Reserve's next policy setting meeting next Wednesday, the Fed does appear to be embroiled in what some sources have told me is a scandal, which is never a word you want to hear within the context of the independent central bank, guys.
And not one you normally hear in the context of the independent central bank, Brian. But just to be clear, the two Fed presidents, they didn't break any laws, right?
They didn't break any laws, and for what it's worth, the disclosure that we got from both of those Fed presidents clarifies that they felt that those transactions were within the code of ethics at those reserve banks. The way that the rules work for these reserve banks, they have mostly identical language when it comes to their codes of conduct, is that you're not allowed, you're prohibited from trading, holding any shares or stake in financial services or bank companies, which means that you can't have shares in Bank of America or Goldman Sachs. But outside of that, as long as the company in question is not a primarily banking organization or a depository institution, you are allowed to hold those types of stakes. Now, if it is a gray area situation, these bank presidents are supposed to clear it through an ethics officer that's at their reserve bank. But again, it seems like all these ethics officers at least the Boston and the Dallas Feds appear to think that these transactions were okay. But regardless, at the top level, even though Jerome Powell says that or rather that the Fed statement acknowledges that they may have been in line with the code of ethics at these reserve banks, the optics of it are not good.